Today, we will learn more about combining high and low time frames for momentum scalping. We will cover a lot of subjects, wins and losses. We will also touch the averaging positions. We have so much to do. Let's start. Finally, back from my little summer trip. I hope that all of you are doing really great and charging up for the summer. Today, I want to talk about combining high and low time frames while trading momentum coins. This was a recent trade. Now you look at the 4-hour time frame. What do you notice about the price action here? This asset was rallying. It is obvious. Started around $14 and jumped to $20 in a couple of days, as you notice. While rallying, it started to create these very large gaps, basically the momentum imbalances. If a price leaves really large gaps behind, it means that some event pushes the price, such as news. This is what I look for in a high time frames. If I trade the momentum coins, if I drop the time frame to 15 minutes, what I see is a little different. Price is not going like a straight arrow, but pulls back, it breathes, and again moves again. This is the trick of momentum scalping. Jumping high time frame rallies with low time frame entries. Let's take a closer look at the price action around here. Okay, notice the break here. With this break, we have our very clear structure box and the protected low area. And at the top, I had our previous month high as the main target to hit. Where is my most optimal entry area? It is mostly a combination of imbalance and order block, just like here. Okay, this trade looks so simple and quick, but in reality it was not at all. This trade took around 5 hours to be completed. It was a mental challenge. We all think we can just scalp the market in 10-15 minutes, but the reality is cruel. Trading can take hours. Let me recap the price action. In high time frames, I know that price started to rally in a direction. When I look at the price along, I can see the momentum. $13, $14, $15, $16, $17. Something pushing the price. I do not even need candlesticks to read this. Then in the low time frames, you are looking for a pullback. A structure box, an imbalance, an order block is suitable entry. Then you make your entry. It requires good patience and time management. Let's talk about a loss. When I opened the GLM coin in 4 hours, I noticed this quickly. This very large imbalance area failed badly, and a new momentum imbalance appeared. Price was in a huge rally like nothing else. I quickly thought, are we heading towards this previous week's high area? It was really far away to reach, but at least a possibility. Let's drop to 10 minutes. Why 10 minutes but not 15 minutes? Again, it is about clear trading setups. Tomorrow I can use 11 or 12 minute charts. I have no attachment to any time frame. In this trade, I have actually spotted 2 possible entry areas with 2 different structure boxes. And you ask me again which imbalance or order block to use. And for the 1000th times, I have no idea. I took my chances with the first imbalance and structure box, and I have lost. When I say this, hear me out. No one in the world knows nothing, not a thing. If I know which imbalances to work all the time, I'll be richest man alive in 6 months. There's only one thing I can do. Risk management. Accept the loss and move on to the next trade. Period. Let's check the order trade. This time I use an 8-hour chart instead of 4 hours. But why? Why in the world I have switched from 4 hours to 8 hours? It's all because I saw better things within 8 hours. Simple as it is. Tomorrow I may check the 10-hour time frame and the next day I may check 15 hours time frame. It does not matter. I have noticed this. This large imbalance and the SR flip area pushed the price up and price started to rally. Notice the price here. Starting from $44 to almost $60. Now, I have dropped to the 5-minute chart. Notice how the rally happened. Price keep making new higher highs in lower time frames. Simple pattern. Break, pullback, break, pullback, break, pullback. Very simple pattern. I have joined this party really late around here. Here, let's take a closer look. Right around here, I noticed this very classic structure box. Price pushed by inner imbalance and powered up and created a new structure box with protected low. Extremely simple boxing that all masterclass students know. But we had one problem. I did not see a nice imbalance or usable order block. With this giant small body candlestick, I did not enjoy this trade. That moment I decided to average this trade. I have made this small entry with a very large stop loss to test the market. I also know that there was an amplifier here which I decided to make the second entry. Basically, I have created one single trade with an end average. Averaging is a style I use a lot in my trades. Okay friends, hope you have enjoyed this video. We covered really nice trades, gained better knowledge. See you in the next video. If you have completed the free trading course and feel like you improved your trading skills, but you need more, an extra, a boost, and you want to move to the next level in your trading life, my masterclass is ready for you. You'll learn liquidity, inefficiencies, and structure mastery deeply. And we will look at forward and reverse trading with momentum super boxes. You will learn how to confirm your entries with magic alignment system. Finally, you'll discover a strategy called YOYO strategy, which will open new doors for you about taking and managing trades. If you are interested, you can find links on my website on the description. Take care friends, manage your risks and stay safe.